Samant Bhatia. Each week, one question, 4 expert witnesses, and an answer. So, picture the scene. You're trying to fix severe problems on the production line of the new car you've bet the whole company on. You're running out of cash. You're the chief engineer and CEO of the company, sometimes working 22 hours a day in the factory. The year is 2018. The car, the Model 3 electric vehicle, the company is Tesla, and you are Elon Musk.
The company was bleeding money like crazy, and if we didn't solve these problems in a very short period of time, we would die.
How close to death did you come?
Single-digit weeks.
Elon Musk talking on the television programme Axios on HBO. But recently the company's fared better. It sorted out those difficult production problems and for the first time recorded 4 quarters of profit in a row. Its share price? Well, after being static for years, it's done well, perhaps too well. In fact, it's risen around 8-fold in a year, making it worth around $400 billion. So, just 2 years after nearly running out of money, it's now the world's biggest car company, making it more valuable than the top 3 car manufacturers put together. Yet, it still only manufactures a fraction of the cars they make. So, on the inquiry, we're asking, are shares in Elon Musk's Tesla vastly overvalued?
Part 1. Driving on Sunshine.
I had a countdown to the day. It was more exciting than the birth of my first child.
This is IT consultant Jenny Potts.
I live in Australia, in Victoria, and I'm a very proud owner of a Tesla Model 3.
Which was delivered to her last December after she was on the waiting list for 18 months. And Jenny, can you just tell me how you first heard about Tesla?
I was talking to one of the guys at work years ago, and he sort of said it's one of those companies you want to watch. And at that point I hadn't heard of Elon Musk. And he said the guy that's heading it up was a PayPal guy and he's really smart.
Elon Musk is also the man behind rocket company SpaceX, tunnelling firm The Boring Company, and recently Neuralink, focused on developing brain-computer interfaces.
I just started reading up about Tesla at that point, and the more I learned, the more I was hooked.
The Model 3 is a mid-sized car and was Tesla's first attempt at a more affordable model, starting at around $40,000 and with a range of up to 520 kilometres on a single charge. The company has now sold about 500,000 of them worldwide since launch. Jenny admits she's a bit of a Tesla fanatic.
I just love my car, and I'm a bit evangelical. You get in it and you don't have to turn a key or press a button. The car just knows you're there. You basically just say, press a gear stick down to drive, and the car drives. And when you pull up, you just take your foot off the accelerator and press a button on the gear stick. There's no handbrake, there's no ignition key, there's nothing.
Just tell us how much you paid for your car.
So I paid $118,000 Australian, which is I think about 85,000 US for my car. My last car was a Jeep. This was probably double what my Jeep cost me.
And running costs?
There's no servicing costs. It's got an electric motor, and the electric motor doesn't have moving parts like a combustion engine, so there's nothing to service. You do have to obviously change the tyres and fill up the windscreen wiper fluid, and, that's about it. We've got solar panels, so it doesn't cost us a cent to charge. I'm powered by sunlight.
And that Australian sunshine has also provided an opportunity for Elon Musk to showcase Tesla's battery technology.
G'day Australia! Tesla will build the world's largest lithium-ion battery down under. Partnering
in 2017, an electricity grid in South Australia was struggling to manage surges in power from solar and wind farms, causing power blackouts for the whole state.
It became a really hot political topic. The newspapers ran with it, people were screaming because they kept on having power outages.
Tesla's CEO caught wind of the problem.
Elon Musk went on Twitter and basically said, I can put a battery in for you that will keep your state powered, and I can do it within 100 days or it's free. That piqued everyone's attention. The South Australian government signed a deal with him. It's a huge battery installation in Hornsdale, and it's been hugely successful. So South Australia doesn't have power outages anymore.
The 100 megawatt battery, built by Tesla, was the world's largest lithium-ion battery at the time and consists of a grid system that runs on the same technology that powers Tesla's cars.
Elon Musk, oh, the man's a genius. He's just amazing. He's today's Steve Jobs. The more you learn about the company, the more impressed you are.
Jenny was so impressed, she wanted to invest in Tesla.
I started talking about this with my husband and saying, I think this would be a really good idea. And that was a couple of years ago. So it was about 6 months ago that my husband finally gave in and said, I think you're actually right, we should buy shares. And we did. And yeah, we bought about $25,000 worth of shares. 25 US thousand, they're worth about 50,000 now.
Wow. How do you feel?
We should have bought them earlier. And we should have bought more.
And are you going to keep them?
Look, we're not selling. We'll hold. Yeah, we'll hold for 10 years, and we will keep buying. I don't think they've reached their peak.
So if I would say to you, do you think that Tesla shares are hugely overvalued? What would you say?
If you ask me if I think holistically the company is overvalued, I'd say it's I think it's still got 4 and 5 times growth left in it. So I'm still buying. I'm still buying shares.
Part 2. The Doubter.
What I would say to Tesla shareholders is that I think that it's a good company that makes great cars, but don't mistake that for a company that is going to generate a significant return over the long term. My name's Chris Rosbach, and I'm the managing partner and portfolio manager of J. Stern & Co. We invest for the long term in the stocks of globally leading companies.
For Chris Rosbach, long-term means looking at companies over 5, 10 and even 25 years to see if investors can make money buying shares at current prices. In other words, can that share price go significantly higher in that time? He says it's important not to be distracted by personality when investing.
Elon Musk is a visionary leader who is very charismatic and who has built Tesla from nothing into the world's leading electric vehicle company. That is a tremendous achievement, and I think he has been able to come a long way as a first mover in this industry. But that is very different from whether investing in the shares of the company is a good idea, because that depends not only on what the company does, but also on what the valuation is.
Tesla's value has increased 8-fold in the past year, from $50 to around $400 a share. It's currently valued at around $400 billion US dollars. You get that figure by multiplying the share price by the number of shares. Chris Rosbach believes that's an unrealistic assessment.
Tesla shares are in a bubble. They are tremendously overvalued, and I don't think that the fundamental value of the company, its prospects, its ability to achieve sales and revenues, and its abilities to achieve profits justifies the current valuation.
So why the stratospheric rise in share price and value in the company then? Chris Rosbach says some people think of Tesla as being a technology stock, like a Google or Amazon, with similar prospects to generate huge profits. He strongly disagrees, though.
It's a company that makes things. The big platforms like Google, like Facebook, even like Amazon, are companies that have significant scales so that every dollar that gets spent on that platform by one of its users is basically pure profit.
But Tesla's cost base is much higher than those tech companies.
Tesla makes cars. It has high costs. It has to produce them. It has to buy the same components that many others do. It has to produce batteries, and it has lower margins. So for every car it makes less money than Google, Facebook, or Amazon do for each of their users.
So, if you value Tesla shares like other car companies, Chris Rosbach says Tesla is way overvalued, especially given how few vehicles it actually produces, fewer than 500,000 compared to the leading car makers Toyota and VW, who currently make 50 times that amount.
If you look at Tesla's sales that they have now, they have about 25 billion in sales on an annualized basis. Even if they were able to increase that by 10 times, and that would make them about as big as Toyota or VW, and even if they could be twice as profitable as Toyota or VW when they achieve that, it would still be significantly overvalued.
Let's say that the share price were to fall. When does it look, in your eyes at least, attractive to pick up Tesla shares?
If you think that they can continue to grow from the level they have, then I think a share price that is perhaps a quarter of where it is trading would still mean that it is one of the largest car companies in the world, and it would still price in very significant growth in terms of what they can achieve in terms of sales and profits.
Experts say Tesla creates the lowest cost batteries in the sector. But Chris Rosbach says it's not clear the company will keep its lead here.
Batteries are absolutely critical because they are by far the biggest component of the cost of an electric vehicle. It's estimated that it could be about a third of the cost. So making them more effective is going to make a big difference. But Tesla is only one of the companies in the world that makes these batteries.
And chances are he feels the competition, mostly in Asia, will catch up.
And those companies are being funded by the other car companies who are hot on the heels of Tesla and are not going to allow Tesla to take a significant market share without fighting for it. So I think it's unlikely that Tesla is going to be able to develop a battery that is going to be so much better than that the other battery components makers can make.
And worse still, Chris Rosbach feels Tesla may not be around in 25 years, when there'll be fewer cars on the road.
If you then think of where the car industry is headed, I think we're headed not only to disruption from electric vehicles, but it's also headed towards car sharing. But it's also possible that we'll step into a pod that is going to be driven autonomously. And so the question is, who's going to be the systems provider that's going to do that? A big car company like Toyota or VW? Is it going to be Tesla? Is it going to be one of the big software companies like Google with Waymo? It is very difficult to predict which of the companies are going to be able to prevail and provide those services. But if I look at Tesla and what they're doing and what their resources are, then I think that is unlikely that they will be able to achieve.
Part 3. The Investor.
They've disrupted the auto industry, and I think they'll go on to disrupt other industries, in particular the power grid and how we generate electricity in future.
Malcolm McPartlan is a fund manager at Aegon Asset Management, which has about $150 million invested in Tesla shares. His specific fund started investing in the company around 2 years ago, when the firm was having those difficulties manufacturing the Model 3. Since then, Tesla's managed to solve those problems, increase production and launch another car, the Y, a lot more smoothly.
There was a lot of fears back then about their ability to fund themselves, their ability to scale. And once we started to get evidence that they could do that, that's when we got quite excited about the investment.
But now Tesla has a new manufacturing challenge. It now plans to make the battery cells, the basic building blocks that make up the batteries. Before, it only bought them.
So let's get started. We have a plan to halve the cost per kilowatt hour.
Yeah.
And it's not a plan that rests on a single innovation, some research project that'll never see the light of day.
At a recent annual general meeting and battery day held in the firm's car park in California, with loyal shareholders honking their Tesla car horns in approval, the company announced ambitious plans to create those cells in mass and halve the cost of batteries within 3 years. Elon Musk says halving the battery cost would open up the possibility of creating a cheaper $25,000 car, making it much more affordable to many more people. But, as we know, Tesla has a mixed record of delivering innovation on time and smoothly, as shown with the Model 3.
If we've learned anything from Tesla over the years is they put some pretty grand aspirational targets out there and, let's be honest, they've failed to meet them.
He thinks it's worth keeping the faith, even if it takes more than 3 years.
They've got there in the end, and what they have delivered has been very impressive. And I would sort of focus more on their absolute delivery rather than what they say they're going to do.
So, put all these innovations together, and Malcolm McPartlin thinks Tesla can make a lot more profit per car than the doubter Chris Rosbach thinks. And that could justify Tesla's share price on current plans to create 2.5 million cars a year within 5 years.
Let's assume an average selling price of $50,000, that they make a 15% operating margin. Let's adjust for tax, and we get to a net profit of around $15 billion. So clearly one could challenge each one of these assumptions as being too generous, but the point is the share price may not be as detached from reality as some think.
Any other reasons why you think Tesla will be hugely successful, justifying its valuation?
Yeah, so I think there are potentially a few other significant market opportunities available to Tesla.
And that includes the stationary battery market. Remember how it made that giant battery for a power plant in South Australia? But there's more.
So this market opportunity could be broken down into two segments: industrial scale storage batteries in the power grids and storage batteries for residential and commercial buildings. And these are used to back up the grid and for capturing renewable energy generation. So I think they're really exciting opportunities.
So, all well and good, but Malcolm McPartlin has also recently sold some Tesla shares. Got to just address the elephant in the room, which is that, you've done well out of your stake. You've been selling off a little bit. How do you reconcile that with, your positive feel about the stock?
When you're running a portfolio and shares go up a lot, they become a much larger part of that portfolio. And in terms of just sensible risk management, we have taken that position down so it's not an outsized position and reinvested into other stocks that we're as excited about. And we acknowledge in the near term the shares have performed very strongly. That's the rationale, just sensible risk control, which any good portfolio manager should do.
Part 4. The competition.
Tesla is definitely ahead of other traditional vehicle manufacturers by 2 or 3 years ahead.
Anjan Kumar is a researcher on electric vehicles at consulting firm Frost & Sullivan.
The pace of innovation itself in Tesla is much, much more higher than the automotive industry itself.
And what innovation is Elon Musk most proud of? After all those delays in creating the Model 3, it's perhaps working out how to mass-produce electric vehicles, as he told shareholders at that recent annual general meeting and Battery Day event.
The hardest thing is scaling production, especially of a new technology. It's insanely difficult. What is the real achievement of Tesla in sort of car company terms? It wasn't making sort of exciting prototypes. It was that Tesla was really the first company in about a century in the US, the first US company in the US to reach volume production and be sustainably profitable.
Anjan Kumar says it shows just how far Tesla have come since they started in 2003.
Tesla's first competitive advantage, or let's say core competency, was the software. And then slowly they reinvented themselves to be more of an engineering company. And then we figured out that their core competency could also be in manufacturing.
Tesla is not the only relatively new company trying to crack the electric vehicle market, however. Some may even have better technology than Tesla, according to Anjan Kumar.
If you look at the other side of the scale, is somebody like a Rivian or a Fisker or a Byton, which are new age electric vehicle companies whose core competency is the software or artificial intelligence, which could be even better than Tesla.
But he says Tesla's ability to manufacture at scale now gives it a huge advantage over all those other new entrants.
It's easy to build a prototype, but then if you have to manufacture the car or the prototype into hundreds of thousands or even millions, it's a huge task. That is something that these new age companies do not have. But Tesla has the best of both worlds.
And he thinks Tesla's proposed innovations in battery cell manufacture could put them ahead of the competition.
They completely broke down on how they want to set up the factory. They are looking at eliminating some of the processes that are not really required. And then a more simpler, fundamental way of making these cells.
But he also insists this is not a winner-takes-all situation. Tesla still needs other manufacturers to succeed to make sure electric vehicles take off.
If you take a look at how many cars are there in this world, it's in billions. About 2 billion cars are there globally. But if you look at electric cars, there are only about 6 million electric cars that are on the road today. So Tesla cannot stand out alone because it's still a very minuscule part of the puzzle. So if electric vehicles have to really grow, Tesla needs someone like a Mercedes-Benz or a BMW or a Volkswagen and an Audi and a Ford and a Toyota and a Hyundai, everyone to sell electric vehicles.
Nevertheless, Tesla is ambitious and said recently it wants to create 20 million cars a year by 2030, which would make it the world's largest car company by volume, even if it got halfway to that target. It's developing new factories in Berlin, Shanghai and nearer to home Texas, with plans for others. But Anjan Kumar points out they've put all their eggs in one basket and bet the company on essentially a single solution, electric vehicles or EVs as they're also known, and that could be risky.
What happens if EVs fail for some reason? Hypothetically, I'm saying that, okay, tomorrow there is a huge breakthrough in fuel cells or hydrogen fuel cells. That's something Tesla does not have. But then if you look at this diversification that the vehicle manufacturers like a Toyota or a Mercedes or someone else, General Motors, have done, they have diversified into different things. Electric cars is one of them. Fuel cells are there. Hybrids are there. These are some things that Tesla does not have, but then, they are very strong when it comes to their core competencies.
So, is Tesla hugely overvalued? Well, there's little doubt that it's a good company with impressive technology, ambitions and a bright future. It's recently recorded a profit for 4 quarters in a row for the first time. But whether its future is bright enough to justify a company worth around $400 billion today is much more debatable. There's a long list of things which would have to go right, like keeping a healthy lead over its competitors in innovation, developing an affordable car, ramping up production and cracking new markets. It's possible, but it's hard, and even Elon Musk tweeted in May that the share price was too high, in his opinion.
The inquiry was presented by Samant Bhatia. The producer was Sally Abrahams.